Welcome and thank you for tuning in. You're listening to the Beyond 50 radio program. I'm Daniel Davis. A lot of confusion out there for people about what's going to be happening with our economy and what actually is happening. After all, with this new administration, it seems helicopter money is somewhat falling out of the sky, but where is it falling to? We're going to learn about what we can consider to be a fake bubble stock market that's now up more than 9,500% since the 1980 low. We'll also talk about government money printing that increased our money supply by 700% since 2008. Printed more in March through April 2020 than in all of 2008 and 2009 at the peak of the financial crisis. Today we're going to be finding out about the kind of U.S. wealth riding on increasingly vulnerable bubbles about to pop, not to be fooled by the so-called recovery, which is as phony as the fake money being massively printed. Joining us here on the Beyond 50 radio program today is Managing Director of ARC Financial Management, which is an investment management firm, and he's also co-author of several landmark books, including America's Bubble Economy, which correctly predicted the 2008 global financial crisis. I'd like to welcome to the Beyond 50 radio program today our guest, Robert A. Whitemer. Robert, thank you for being on the program today.
Thanks for inviting me, Daniel.
Now, let's talk about what we're experiencing here that people see, they hear about it, but obviously if you're smart these days, you don't listen to the news at all because they don't seem to know what they're talking about in the first place. But what's really going on here?
Well, what's really going on is kind of easy to understand is, basically government and to some degree Wall Street is, likes the short-term benefits of doing something bad. Kind of like if you're a kid, you ran in, you grabbed the cookies out of the cookie jar. It might be bad, but boy, those cookies tasted good. And as long as you can still get them, you're going to keep doing it. So right now, we're getting some real short-term benefits out of doing some of the most incredibly reckless financial maneuvers that this country's ever done.
I know with the current administration here, you got this new stimulus passed, which, a bulk of it, it's estimated that 9% of it goes to the American people and the rest of it's going everywhere else. And now there's a proposal for another $2+ trillion for infrastructure. What are your thoughts about that?
Well, the bottom line economically or financially is that anytime you borrow money, whether you throw it on infrastructure or just let anybody have it and spend it, it is a boost to the economy, right? I mean, as long as you're borrowing it, not taxing it or whatever, it's a huge addition. And think about it. We're looking at in the last year or so, if we had $1 trillion deficit heading into the COVID pandemic. We've done 3, 4, 5 trillion, how much has been spent, not all that, but at least 4 or 5 trillion total in deficit spending. That's almost 25% of your annual GDP. And it's really 25% growth of your GDP. It's what you get out of that. If you spend it all in 1 year, which we haven't, but you get the point. Normally, we're happy to get 2.5% GDP growth. So all that money being thrown out there is going to definitely boost the economy. It's going to definitely boost the stock market. And since the Fed is so willing to, buy the bonds that are funding all this, it'll keep interest rates low. You got the best of all worlds, right? Low interest rates, massive amounts of money going out, huge growth in asset values, and pretty good growth in the economy coming up. Great short term. Absolutely disastrous long term, and nobody seems to care. That's what bothers me. A quick story. I had a good friend. He's a smart, capable doctor, definitely very bright, knows what he's talking about. He was talking about how he supported the stimulus because he wanted a bridge to go from COVID to post-COVID, right? Okay, that's what everybody said, and it makes sense. I hear you. There's definitely problems now, and we could use a bridge. But I said, well, what happens if we get to the other side of the bridge? We got $5 trillion in debt. How are we ever going to pay that off? Oh, well, we're not going to pay it off. We're never going to pay it off. And that's why, Daniel, I think we're moving kind of, into fantasy land. I like to say we're between a rock and fantasy land. I'm saying the other option isn't good. And if you didn't run the deficits, we'd have a lot worse economy. If you didn't have interest rates at 1%, you'd have a lot lower stock market and real estate prices. So I know the rock. But we're starting to move into absolute fantasy land by thinking we can borrow this and we never have to pay it off, or we can print and we'll never get inflation. That's the long-term danger, real danger.
Now, let's talk about what people should do or based on what you're seeing when it comes to investing, because a lot of what's being hammered away out there are things such as Bitcoin and, of course, gold and silver, and then eventually things, like hard assets like land. So what are your thoughts on that?
Well, I think there's going to be a lot of fake money to be made in the next, year, 2 years, and it may be longer. I mean, this thing seems to be able to go longer rather than shorter. We've gone so far without getting inflation after doing a lot of printing in the financial crisis that it's blown out all normal economic models, which normally said you'll get inflation in, 18 months to 24 months after you start printing. We haven't. So, maybe it's going to go years longer, and during that time, and I think it'll go at least another year or two, there's going to be a lot of fake money to be made in the stock market. So, good to participate, good to be part of that, no question. Bitcoin, well, that's a trickier one to predict, but there's no reason that, if people get excited about it, it kind of goes up with the stock market. Gold, I think, will be good, but gold's place in your investment portfolio is more down the road than right now. I think it's good to have some now. I think it'll become more important later. But right now, I think if you want performance, it's going to be the stock market until basically you get what's probably going to be with high inflation of 5 to 10%, maybe a little more. And most importantly, when you, instead of getting rewarded for taking cookies out of the cookie jar, you reach your hand up in the cookie jar and you get shocked, meaning, if the Fed prints more money, the market goes down. If Congress borrows more money, the market goes down. And really, that's what we're going to wait for is I don't think anybody's going to say, well, gee, Bob, I think you're right. Let's change. I think they're going to go, gee, Bob, you're wrong until proven right. And that's only when you start getting the immediate negatives instead of immediate positives we're getting now from doing really reckless stuff. So I think we got a little ways to go, and I think stocks are going to be, a very important part of that for at least the next couple of years.
So what are your thoughts then about Bitcoin? I mean, is that an illusion? Because I see it, as the one thing that everybody's just been investing in. This thing's been going up, but it's like, well, where are you using it?
Yeah, exactly. In other words, it's one thing to bid up, let's say, Apple computer too high. But I know what they're doing. They're producing phones that I have and computers that I have. So I know what they're doing, and so I know what the revenue stream is, and I know the profits. Maybe it's too high a price. Maybe Tesla's too high a price. But I know what they're doing. I don't see anybody yet adopting Bitcoin as a new technology, and that worries me. There was a lot of talk about, well, if Bitcoin's no good, blockchain technology is. I remember the Economist magazine out of London had a big cover on it, and how blockchain will change the financial world. Well, it hasn't. And so far, really nobody's using Bitcoin for the most part. I mean, people are adopting it as an investment. Well, sure, it's a good investment. Up 5 times, so or more. But as a real technological innovation, like an iPhone or even electric cars or what, I don't see where it's being used. So yeah, in that sense, the price is getting way ahead of its true innovative status in terms of some changing something we do. I mean, it's right now kind of a innovation on on sort of Twitter only. It's not really changing the way we buy stuff now. Maybe eventually, but there's no proof that we're going to get to that eventually. As there is with an iPhone, where once you got an iPhone, chances are it's going to start getting more widespread. You'll have to come up with better models and more apps, and just exactly what happened. Don't see that with Bitcoin right now.
Exactly. When you hear about the Great Reset, especially during the political arena, you hear about what, of course, the Trump administration did and how they were improving and making the economy the best that it's ever been, that what he was intentionally trying to do was also crash the central banks and get people and even nations and so forth off of being, tied into the central bank, kind of enslaving us, if you will. And you think about people like the International Monetary Fund, so forth and so on, who want to switch to the digital dollar and put people on universal basic income. Do you have any insights about that?
Well, I think we got a couple of things. The universal basic income is sort of one issue, which that's been around for decades and decades. If you go back to the McGovern plan, $1,000 a month for everybody, that's sort of just an expanded welfare program, and we'll see how far that goes under the current administration. Don't know. I think certainly I would expect some expansion in medical benefits, food benefits. Yeah, the stimulus related stuff. But that's kind of one issue. The other issue is a digital dollar, and I have to admit I always struggle with that because most dollars are digital. I mean, think about it. When the Fed prints money, does it print anything? No. No, it just basically says, okay, I want to buy, 100, well, not that much normally, but 10 billion worth of bonds, and I'm going to buy them from whoever gives them to me. And it could be individuals or corporations or could be life insurance companies. Whoever sells them, and they're going to put money in their account, and that's all electronic. They just wire out money, just like you and I do. If you, I'm sure you've done wires before. I've done wires. It's the exact same thing the Fed's doing. They're wiring you money from their account. It's just in their account, they've got an infinite amount of money to wire. And that's how they print it. It's all electronic. And so, it is an electronic dollar. So I'm not sure what when people say electronic, I'm not sure what that means. And what I can say is what currencies will be, that's what we're going to use for a while, guys. Well, the dollar's going to die. No, dollar's probably not going to die any more than the Italian lira died when they had high inflation, or when the mark didn't die after high inflation, and neither did the Turkish lira. What happens is the dollar just instead of having a dollar in your pocket, you got $100 bill in your pocket. It just loses value. That's all. But I don't think currencies are going to die, and I think that most of the dollars in the future will all be absolutely digital. More, if not more and more so. Hell, after COVID, it seems like nobody takes cash anymore. But it's heavily digital already. Continue to be, and it will. It's just as easy to devalue by printing more digital dollars as it is by printing more currency, printed dollars. And that's how we devalue the dollar now. It's all digital.
Yeah. Sounds that's the way it is. So how would you suggest people actually prepare for things like this? Because there's also concern about, how people use their money, who they are tied into what's known as a social credit system.
Yeah, I think sometimes people get overly worried about sort of the wild stuff and don't worry enough about the basics. The basics are that with high interest rates, which we'll eventually have, and high inflation, the value of bonds, real estate, and stocks falls enormously. We actually have a little model on our website that will show you just how much it falls. It's a lot. That doesn't mean that your economy goes under. I mean, you can have asset values fall 95%. Stock market could fall to 500. You've still got a big economy. I mean, maybe it falls 20, 30, say it falls 50%, make the math easy. It's still a $10 trillion economy. So, let's not think about, the world's coming to an end. What's coming to an end is unbelievably outrageous asset values. So how to prepare for that? Well, one, get out of those fake money assets as best you can before it pops. Well, how do you do that? Well, obviously my firm has ways of doing that, ways of telling that. We have a proprietary trading system, but that's what you need to do. And if you're worried, you can move early, and moving early is usually a precious metals exit. I think precious metals will do very well long term and through a problem. And not that you would necessarily use gold coins for transactions, but you would, change gold into dollars at that time. Not too many, but whatever dollars you need, and buy stuff. You just sell them, just like you sell gold today, and you would get dollars in return, a lot more dollars than today. So I think it's just beware of that the interest rate sensitive assets, which are stocks, bonds, and real estate, are going to take a hammering at some point, and non-interest rate sensitives or assets or ones that do well, like gold, will do very well. Gold and silver, I'm not getting rid of silver or anything. And then the other thing is, in terms of banking accounts and all that, I mean, the major banks will be supported, okay? I mean, the major banks in the U.S. will be supported, bailed out, if not nationalized. But, their stockholders may be wiped out, but the banks won't. Because the Fed can easily keep banks alive. They can print money, they can do that. What they can't keep alive are like CDs or investments in the banks, investments in their stock or CDs, things, big investments. No, I mean, the idea, well, I got a 5% invest in a CD with Bank of America. Well, no, so that's not going to be protected necessarily if it's large. Smaller stuff, sure, they'll try to bail out what they can, but checking accounts, definitely. Checking accounts you have to worry about. Again, interest rate sensitive investments, be it a bank CD or bond, they're absolutely at risk over time as you get higher interest rates. I mean, it's just simple math.
Now, you have an upcoming book that's going to be happening here in June, Fake Money, Real Danger. Tell us about that.
Yeah, so what's happening there is I think it sums up a lot of what you were saying, Daniel, and what we're talking about is that you got a lot of fake money going out there, and that fake money is, essentially printed money, right? That's what's really making it all work. The Congress could borrow money, but ultimately that would really force up interest rates if the Fed wasn't able to come in and print money to buy those bonds. And really, this whole thing can continue as long as you can print fake money and not get much inflation. And in fact, as I've often said, no inflation, no aftershock. No inflation, it's real money. I mean, if you could keep printing money and never get inflation, you found the golden goose. I mean, that's the bottom line. It ain't fake unless it causes inflation, right? And so right now, it's fake money, in my opinion, because it's going to cause inflation. But for right now, it's kind of real in the sense that you can make some fake money profits. The real danger is when you ultimately get a lot of inflation and higher interest rates, and that's when the real danger becomes huge because you can't reverse. There's no, oh, well, we see inflation coming, says the Fed, so we're going to just, pull back on money printing. Baloney! You pull back on money printing when the economy is facing problems like higher inflation and things like that. You're going to hurt the stock market. You're going to hurt real estate. I mean, you put interest rates up to 3 or 4%, which will do almost nothing, by the way, to hurt, keep down inflation. You're going to virtually start killing the stock market at these high values. As you said at the beginning of the program, yeah, I mean, we're up. I mean, the straight percentage from 1981 to now on the Dow is we're up 30,000. We're up 3,000 times or whatever, 30 times. It's huge. So that's why we can't do what Paul Volcker did and raise interest rates to double digits, which might tame some inflation. We're going to have a hard time raising rates or letting them go up to 3 or 4%. I think the Fed will just print money. If we get more inflation, they'll just print money to keep interest rates down, and that'll work for a little while. And that's what I mean. More fake money will work for a while, a few more years, maybe more, a few more years after that. But the real danger is that it will blow up. In fact, it's guaranteed to fail. GTF, guaranteed to fail. Partly because it's human nature. As long as nobody slaps your hand, that goes in the cookie jar, you might just keep eating cookies, right? And I think that's what happens with printed money. If you don't get much inflation from printed money, guess what? We're going to print a lot more. If you can borrow money and the Fed can, and you can keep interest rates low, again, by printing money, Congress is going to borrow more. I mean, why not? It is free money. Only if it truly debases the currency, meaning, we get inflation, is there ever a negative. So I think we're going to keep doing it until it blows up. I don't think we're going to see it ahead or anything, and partly because we've gone so far, there ain't much we can do. I mean, if I went to Congress now and they said, hey, let's cut $100 billion off our deficit, well, I'd just be laughed at because, well, yeah, right, so now the deficit's $4.9 trillion instead of $5 trillion. Bob, boy, great. You're right, it's meaningless. Same with printed money. I mean, in 2012, or in 2010, we added $1 trillion to the money supply. Well, you could say maybe we could reduce that. But now, we've gone from 800 million before the financial crisis to 8 trillion of what, essentially printed money. They call our balance sheet, but printed money. And it's hard. I mean, reduce that by $500 billion, that's going to really push interest rates up, and that's not going to be good, and it's really not going to do anything. Double-digit interest rates are what you need to tamp inflation. We can't handle that. Market can't handle the truth. And so just be aware, there's a lot of fake money to be made, probably yet left to go, but you need to get out before it goes down. And get out means, even cash in a money market account actually works because it will sort of keep up with inflation. Now, great, you might lose some money. I think gold will be your best exit. But it doesn't mean we're trading gold coins. It just means you keep it gold, and when you need to buy something, you have to sell a certain amount of gold and, buy it with that.
I know that, is kind of one of those things when we were getting a lot of the stimulus and people was actually being put being put on unemployment and so forth.
Mm-hmm.
And, there were some people that I knew that were in that situation. So what do you plan on doing with the money? And some of them were just basically partying like it was 1999. And I said, if the government's going to give you basically what seems to be free money, that's the time that you start buying some hard, valuable assets. Get into gold or silver, just stuff like that, because eventually that dollar is going to go down next to nothing. I mean, look at how much it's been devalued over the last 30 years, for instance. And yet gold and silver seem to maintain value, and they have proven this through history. Bitcoin kind of comes in there with this great illusion about, boy, I should have gotten in when I could have bought, a whole Bitcoin for, what was it, $700, I don't know. And now it's at some ridiculous amount. I said, but what do you spend it on? Where do you use this? How do you barter with it? And what happens if you actually lose that digital signature?
It's more like GameStop.
Yeah.
Well, yeah, exactly. It's more like GameStop stock. Is you've gone from $3 to 180, but is GameStop itself any better? Is Bitcoin being used? No. But you sure would have been good to have bought GameStop stock at 3. It's still like at 180, 160 now. Great investment. But fundamentally, right, exactly. It's not. You're not really doing anything with Bitcoin or, frankly, GameStop other than closing more stores.
Exactly.
So I would add to that, that as you said, when the money's out there, people are going to spend it. I will say that, people will say, well, precious metals have gone down. They have. I mean, they peaked back in, 2011, and it's been a tough ride since then, the last 10 years. It's almost come back up to that point. And so, long term, if you really look long term, if you go from 2000, when gold was, way back down there in the, 300 range, it's done quite well, since then, and much better in the stock market, even including if you reinvested all your dividends. So. But it has been a rough ride for the last 10 years, and I'm not saying it's going to do great over the next few. And I think it could do okay. But I think it really comes into play, once and as you're getting nearer to, yes, significant inflation, and that's when inflation, interest rate sensitive assets go down, that's when gold really will shine. Until then, the shine's going to be on the interest rate sensitive investments because low interest rates are going to help a lot.
Yeah. Well, just one step at a time, I guess. If it's just like I just kept imagining, here you got this drug addict that says, well, hey, they just given me the keys to the drugstore, and I'm just going to keep, bringing it on. Yeah. It's all free, what do you do? And I hear you. And it's funny how you look at, for instance, the news and how they all talk about it. There's, of course, all kinds of speculation about what it is or what's going to happen. But in the end, anything you can trust is the feet that you put in front of you one step at a time and try to make the right decisions about getting yourself, for one, educated at least to know what's out there, what you should do, and not really buy into the illusion so much and protect yourself.
Yeah, it's hard. It's unbelievable for a lot of people, that you could really have this worldwide pandemic recession, and then, housing price goes up, stock prices go up, economy's booming. They really can't believe that the government can borrow $3-4 trillion and nobody in the stock market cares. Everybody just says, great, well, we'll never have to pay it back. It is, when you go down the road 20 years and look back on this, people are going to go, oh my God, really? It was so obvious what you were doing is you were just stealing cookies out of the cookie jar, and you thought, they'd never end and they'd never get caught. And, that's what's really going on, that anybody would support the idea that you could just borrow what's going to soon be $30 trillion and never have to worry about it, or increase your money supply, hundreds and hundreds of percent and never get inflation. I think people are going to look back on this and just be stunned. And there's a lot of people now who are, and I think what's even more stunning is the, quote, smart people on Wall Street, at Harvard, or at University of Texas, or wherever. Pick your school, University of Wisconsin, anywhere. Don't really seem to see this as much as the guy on the street, that can see, gee, can you really borrow forever and not pay it back? Can you really just print money and never get inflation? Yeah. Huh?
Right.
And just unbelievable.
It's kind of funny how a person can paint an illusion, and as they keep seeing it each day, it becomes more real to the point that anything else, is an illusion. I mean, I've thought of myself over the last 10 years, maybe I should have ran in for a government office. That way I could just go ahead and write laws and print all the money that I need to up. Just go ahead and play by the laws. That's what everybody else seems to be doing. Why not? Forget about serving the people and so forth. It's a crazy world we live in, certainly. Well, Robert, it sure is a good time talking with you here. Tell people where they can find out more about your work, things like that.
Sure. So obviously on Amazon, you can see our Fake Money, Real Danger book. It's up there. It will be coming out in June. If you want to find out more right now, go to aftershockpublishing.com. Aftershockpublishing.com. It tells you about what we do, what we think, and you can sign up for we have, usually weekly alerts or updates, more updates as to what we're thinking or interesting things in the news. So sign up for our email list, and also there's a link there to ARC Financial. You can learn more about us, and with all that, certainly you can give us a call or send us an email from the site for any questions you may have. Well, aftershockpublishing.com.
Very good. Robert, thank you for being on the program today.
Thank you, Daniel.
You bet. We want to thank you, the listeners out there, for joining us. You can discover more at beyond50radio.com. That is the number 50. We encourage you to sign up for our weekly e-newsletter and stay up to date with what's going on in the world of Beyond 50, as well as our upcoming shows. I'm Daniel Davis. Thank you for joining us. This is the Beyond 50 radio program. And remember, wherever you are is where you should be. Have a great day.